right, guys, this is basic training. The whole point of basic training is that within an hour or an hour and a half, you should have a basic understanding of what it takes to protect a family from A to Z. Okay, and then when we're done, your best education is going to be getting out in the field and, you know, talking to clients, right? We can watch videos all day long on snowboarding and we can talk about snowboarding, but until we actually go snowboarding and fall on our face a couple of times and get back up and try again, you aren't going to learn it, right? Well, it's the same thing as this business. We can sit here and watch training videos all day long and read it, but until we go out there and actually test it out, 80% of our education is going to come from doing, right? And then when we come back and watch videos, then it's going to start clicking and making a lot more sense. Okay, so it's important to always be continuing our education as we go. So we're going to go through the basic training today. Hopefully all of you guys have read the basic training page, studied it for at least 3 hours. And if the people that haven't studied it, I'm recommending you guys take this a little more serious. Okay, it says right here in the getting started section, if you take your time reading this stuff, it says at the very bottom before you do training, it says please study this page for 3 hours. Where's that? Right here. Right somewhere over here. Well, it's at the top, basic training. Study for 3 hours. Okay, so if you guys haven't done that, here's your first lesson. Stop slacking off. Okay, this is an important job. The more we study, the more we're going to make. The more we are coachable, the more we follow instructions, the faster we're going to start making some money and we can change things around. The first thing I want to talk about is perspective, right? This business physically is really easy, but it's all a mental game. And when we first start off, it's important for us to look at this the right way. Perspective is everything in this business. As a team, I like to think of a lead as a request, right? If we think of it as a lead, it makes us nervous to call people. We think we're like scammers. We think that if you guys can throw yourselves on mute for now, here's some sort of background, I appreciate it. But we like to think of ourselves like, oh man, I'm going to be a telemarketer, and be bothering this person, call them up. It's kind of scary. And that's what makes it nervous for us, right? Because we're thinking of it the wrong way. But if we look at the right way, it's someone that we just requested some help. And so it's kind of silly for us not to call that person and see what they needed help with, right? So think of leads as requests. How many leads did you buy this week? How many requests for help did you buy this week? Okay, so change your perspective. Calling a lead a request, it's just a person requesting your help. So why wouldn't I want to call them? They reached out to us. They're the ones who responded to an ad. It's not like we're cold calling people and trying to convince them of something. They all asked to be reached out and talked to. Okay, we like to think of a sale as helped, right? We don't want to go in there and try to sell somebody and convince them. We want to help them. Okay, don't want to convince or sell a client. We want to find the need, asking lots of questions, and then help the client solve that problem. That's it. We like to think of a close as protected. Our job is to ensure the families we help are protected financially, no matter what the future holds, right? So we don't close people. Oh, I closed this client. No, I protected this client. I put them in a better spot. We don't know what the future holds. If that person dies tomorrow, his family's going to have some money financially. They're not going to lose their house, their cars. They still are going to be okay financially. Okay. So change your perspective, guys, change your results. And I want you guys to start questioning yourselves and asking, how am I looking at this? What's wrong? What perspective am I in? Right. So if we change our perspective, we'll change our results. Okay. The advanced training is going to help you advance. The basic training is help you get out in the field quickly, start helping some families ASAP. But like I said, 80% of your education is going to come from starting and doing. Don't wait, jump in, fail. First attempt in learning. Okay, so fail forward. Okay, can't learn to ride a bike by watching videos, all the same stuff I talked about earlier. But we click on the advanced sales training. There's all kinds of good stuff. We got this whole virtual sales thing right here. We got America Bootcamp. You get 30% off your first CRM lead order if you complete this within 10 days. Josh Williams has an excellent bootcamp right here. Advanced sales, this is kind of like once you're writing 10K a month, starting this will teach you how to write annuities, things like that. If you do want to set appointments, we have some set appointment scripts right here with a little nice misspelling as well. Then we got presentation scripts right here and how to get free leads. So This is going to be some advanced training once you guys get to that. Once you guys get out in the field, while you're working, go through the advanced training next, okay? So now we're in the steps. Commitment. Step number 1, we got to commit. Okay, most people in this business, they just quit too early. Okay, is it possible for you to lose money at first when you're investing in any new business? Yes, it is. But we make an average of $1,000 for every family we help protect, and we get paid 4 days later. Okay, so it makes it very easy to make your money back quickly. Okay, we have to make those choices. Like 15 days from now, am I going to spend money on my rent, or am I going to invest in my business? I personally, would put it into a business because I know I can turn that around and make more money from it before rent's due, and especially in this business where you get paid 4 days later. Okay, it takes about 50 presentations to become pro. So what's a presentation? That's giving some options, okay, and then seeing if they say yes or no. Okay, if a presentation isn't calling someone and they go and they hang up on you, okay, actually going through an actual presentation, getting to the price, you know, give them the options, and then if they say yes or no, that's a presentation. So it's going to take you a while. Count your first 50 and don't give up. You have to learn to ride the bike. Once you do, it's easy, right? It's like riding a bike for life. Right, Amy? Yep, you learn how to ride a bike now. You can ride it for life. Got a thumbs up on that? Okay, good. All right, possible return on your investment. You know, it may take you 10 presentations to break even. So let's just say you spend $1,000 to get to your first 10 presentations. Might take you those first 10 to get 1 sale and get, you know, your $1,000 back. It's very possible. Most people don't take the 10, but give yourself that patience to get there, okay? Might take you 20 to get to 200% ROI. Now you're doubling your money. 30, now you're tripling your money. Spending 1,000, turn to 3,000. 40 presentations to get up to 4 times what you're investing in, 50 to 500. Your ROI is naturally going to go up as you're being humble to your mentor's guidance and being coachable, learning from your failures, your first attempts and learning, right? So humble means you're reading this stuff and taking it serious. And if it says read and study for 3 hours, you're actually doing it, right? That's being humble and being coachable, not being cocky, going, well, I don't really need to read this. I don't really care, right? So cocky people, they're not going to make it. Humble people are going to make it. Hungry. What's hungry? Studying, sticking to a weekly schedule, investing weekly into your business, watching a video every single morning, right? On the team calls and the role play calls like we are right now. And the team calls we have is the one we had earlier today. Was anyone on the team call today?
Yeah.
What'd you think of it?
That was good. It was real good. I liked I had to jump off towards the end, but the guy from Seattle.
It's worth it, right?
He was really, yeah. Yeah.
Okay. So super motivating stuff. Get on these team calls. I'm on it every single week. The weeks that I'm not, I tell you what, my motivation goes down. And I've been doing this for 11 years. So there's something to do, right? Throw yourself on mute. Yeah. Okay, it was Erica. All right. So we got Friday. We got the FFL America. That's the office I'm in right now. And then we got the corporate call. Reach out, guys. You know, utilize GroupMe, text me, text your upline. If you get a no-show or a no sale, don't wait till in a week. We're here to help you out. So please reach out. If you're like, I don't know what happened there, let's go over it now. Get on the role play call that we're having after this call, and let's learn each time. Okay, there's people out there that are making $15,000 a week. They are. And if you're going, oh, I'm just unlucky, and it's the lead and it's the training, it's everything but me, you're wrong. It's you. And the only way we're going to get better is if we reach out and ask questions and we're on the training calls, right? Can I get some thumbs up on that? All right, cool. All right, so GroupMe, participate. Please, guys, hard stuff. Let's be active in there. Let's check it daily, put it on the front home screen. This is your resource where we can all learn faster together as a team. So let's really utilize that. Income goals. Who has a good income goal? Someone take themselves off mute. I'm gonna have to call on somebody here.
30,000
You want to make 30,000 a month or a year?
a month.
a month.
year.
30,000 a month. I love it. 30,000 a month. Okay. And why do you want to make 30,000 a month? How would your life change?
Well, I can invest in other things without it being a hardship.
So invest, I like it. Is that investing for your future? Or are we investing in like a Lamborghini?
No, in my future.
Okay, so we got investing. It's a little boring. We'll easily make.
If I want to do that, I'll just go rent one.
There you go. So we got 30,000 a month. How much is your income going up? Like, what are you used to making?
Between 10 and 12.
10 and 12. So now we're tripling our income. Now, what else besides investing are we going to do with that?
Invest in myself.
Okay,
But give back.
What kind of investing? So here's some really good whys. If we talk about that, I want to make $200,000 a year, it's easy for us to make excuses, right? If I talk about that, I want to invest towards my future, it's too generic, it's easy to make excuses. So our whys need to be something tangible that we can visualize and see. So my reason I want to do, make a lot of money can be, I want to sit front row to or courtside to a Bulls basketball game. I want to be able to afford that. That's a good why. I want to retire my mom, right? I want to buy a house for my family. Okay. I want to get a new car. I want to pay off my student loan debt. Okay. So we have to be very descriptive of why we're working, and why that's important is it helps us make good choices, right? So we can choose now, am I going to watch Netflix till midnight or am I going to study? Okay, because if I watch Netflix, I'm not going to be able to retire my mom. Okay, I'm not going to be able to get that new car I wanted. I'm not going to be able to go on that vacation. I'm not sitting courtside. Okay, so things that are physical that we can imagine, these are our whys, what the extra money is going to do. Okay, maybe it's less stress on bills. Well, I think I'm going to watch Netflix because I actually like stress on bills. Or am I going to study because I don't like stress on bills, right? So you have to think of really tangible, really good whys and write them down right here on your road to 50 map. Because if we don't know why we're working, guess what? We don't work. We don't work. So this is really important so you guys can make proper decisions. It's a choice to work and commit, or a choice that goes towards these future whys that are tangible and I can see in my head, or a choice to give up, right? So give me some thumbs up here if you guys can commit and for the road to 50. Who can commit? Your thumbs up? All right, cool. So don't quit till we get to 50, okay? It's gonna take some money, guys. It's gonna take some money to get up to that road to 50, okay? You have to spend about $4,000 probably putting into your business before you get to 50. Now you're going to make a bunch of money back from that, but you have to put money in. Why do I say that? Because if we're spending $100 a week, that's not going to give us a lot of opportunities to present. It's going to take us 40 weeks, right? So the more we put in, the faster we're going to get our skill sets up and get to this road to 50 to where we're getting our ROI to 500%. Is that making sense? And the faster way we can get there is by reinvesting our money back in, right? So if I make my first sale and make $1,000, I can go spend it, or I can reinvest it back into my business and I can get to my road to 50 faster because I have more opportunities to get out there and practice and get my confidence up, right? So you want to try to ask yourself, what's my goal to get to 50 presentations? Sometimes people do it in a month. Sometimes people do it 2 weeks. Sometimes people take a year. The people that are taking a year, I'm being honest, you're probably not going to make it, right? So who on this call is going to print this out, write down some detailed whys, and not give up till you get to 50? Give me a thumbs up. All right. And then for the people there, thumbs up, I like that. All right, cool. So any questions on this stuff, guys, on commitment? Okay, good. Invest. Okay, so we have to invest to make some money, right? This is the best business in the entire planet because we make, 500%, average on a return on investment. Most businesses are 25 to 60%. So that's pretty incredible, but we have to put some money into it to make some money. CRM leads, how to use a CRM, other lead options right here. If you need your licenses in more states, if you're going remote, click right here, some states not to do right here. You know, you get your license in any state once you're licensed in one, pretty cool. Lead discounts. Okay, who wants to have a better ROI, right? So if you spend $100 a month on work spots, you're going to get these lead coupons that I'm going to post in the group me chat for like 30% off. And it kind of happens like 3 to 4 times a month. So if you're spending $1,000 on lead in a month, which we should be getting up to spending $1,000 a week, so we can make $5 grand, right? So for yours, you said it would make 30 grand. We probably got to spend, let's divide that by, we got 30 grand. What's that divided by? It's about 10,000. So we probably spent about $1,500 on leads to get to 30,000, right? But if we spent just 1,000 a month and we buy leads one time, 30% off, it's going to save us $300 on those leads. The app pays for itself. So this is a really big no-brainer. Pay for work spots. It also gives you access to all the offices nationwide. So if you have an office near you, you can come to the office and dial on your dial days or work there. It helps you be more efficient, be around people doing it. How to get unlimited leads forever. Invest $1,000 for 91. Sell 1 out of 91 leads. Use that 1,000 deposit to buy another 91 leads. Sell 10 out of 182 leads for $10,000. Withdraw 1,000, recoup your initial investment, and you got 4,500. Now you got $5,500 in the bank, all money recouped, and 591 instant leads. So reinvesting back in is going to get us to our road to 50 quicker and to get us to our 500% ROI that we're shooting for, okay? Any questions on investing? Everyone's good to go? Okay. Get free leads. What's better way to spend money up here? I want to get some free leads, right? So one way you can do that is get referrals, right? After your presentations, start asking for it. Here's an emergency response network. You can read this to the client, you know, after you're done presenting. Hey, there's over $1 billion in unclaimed and unpaid life insurance policies nationwide due to the fact that some of these policies are in place for 10 to 20 years. I mean, that's a long time. Also increases your chance of the policy being misplaced. Without policy information, the families don't know who to contact or how to claim those benefits. So, you know, what this form is designed to do is protect you and your family to make sure the policy information is shared with those listed on it, okay? Essentially, it eliminates the chance of that policy attributing to $1 billion. Okay, does that make sense? Perfect. And this kind of tells you exactly how you can get some referrals, right? How to say it. So practice this stuff, get some free stuff. Pablo today or last week, he wrote $33,000 in 1 week. 90% of his business came from referrals. Free leads.
What?
90%. So he's not buying this stuff. He's just asking for leads, for referrals every single time and got really good at it. So ask for referrals. This is one method, emergency response. Another method is the get referral script. You can print this out and practice it. Okay, which is up here. So practice that stuff. Why not get some free leads? Okay, let's get in the presentation. Read this thing out loud, okay? Then read your paragraph and pull away the script. We're gonna go over role play after this, but get good at your script. You know, if someone reads this like 5 times and goes, yeah, I'm ready for role play, I don't know why you're here. I really don't. I don't know why you're starting a business. You're being lazy, okay? The more you practice, the more energy you put in the business, the more money you're gonna make. Let's take it serious, right? So read this out loud 50 times and try to get it down to a point to where you're not reading it word for word and you almost have it memorized. You know, if I'm reading the script right now, hi, hi, Phil, this is Ryan. The reason I'm calling is because we received the request you filled out online for the Arizona State Life Insurance programs. Looks like we have your date of birth listed here at 6/21/81. We got that right. Okay, I'll have you off the phone in a second. It sounds like I'm reading it. But now I have it memorized, I sound a lot better. Hey, Frank K. Ryan, just get back to you. Looks like we just received that request. You filled out online about the Arizona State Life Insurance programs. We do have your date of birth listed here, 6/21/81. We got that right? Okay, great. Hey, have you off the phone here in a second. Just need to grab a pen and paper and we'll knock this out. Let me know when you're ready. Okay, I'm not reading it word for word, right? I'm just using it as a guide. So when you're reading this thing, you guys want to pull it away and try to say it without looking at it and being yourself. The script and the words on it don't matter. Your tonality of being yourself matters more. Okay, 20% of it is the words on the paper to give you some ideas of what to say. 80% of it's your tone and perspective. Okay, you saw the contrast there, right? I'm terrible when I'm trying to read every single word. I sound like I'm reading. But if I can look at a certain, word and keep me on track and just kind of be myself, it sounds a lot better. So CRM, good way to start, because the lead's only $5. Once you have some money for some live transfers, which can cost $80 to $100, or mailers, which can cost $35 to $60 a piece, or if you want to set appointments, this is an excellent script to use. This is the one I use, right? Because I'm buying some mailers. Below this, we have a boot camp on this script that Josh Williams made up. I made a couple adjustments to it to make it better, but excellent. Go through that. We have a live call that I did right here that you guys can watch as well on this kind of type of script. Okay. All right. So for presentations, what are some quick tips on presentations? And is anyone setting appointments on this call? Or are we all doing the remote one call closes? We're all remote. Okay, cool.
I started setting appointments for face-to-face.
Okay, cool. So yeah, if you do want to. Nice. Okay, cool. So yeah, if you want to set appointments, that's going to be in the pull down menu over here to the left under advanced training. There's some scripts for setting appointments. So most of the people on my team are going remote since that's what I'm doing, but there is appointment setting scripts there. And they're pretty good. 11 years of experience put into those scripts. So if you need those, that's where they're at. All right, continue on. So we got find your nose. Okay, on the CRM, 90% of the people you talk to will tell you no. So if you're buying leads for $100 and you bought 10 of them and you're going, I don't know, Ryan, they all said no to me. Yeah, they're $5. Okay. Okay. If you could spend $100 and turn in 1,000 every time, that's pretty good. Okay. So if you're expecting to buy 10 leads for $5 and have 5 yeses and make $5,000, I mean, that's a 5,000% ROI. So, let's be realistic here. They're $5. Okay. Now we're starting off with a $5 lead because messing up on $5 doesn't hurt as much as messing up on $60. Okay. 10% of them should say yes as you get better, right? If I buy a $60 lead though, I'm probably going to get 30% no's, 60% no's and 30% yeses. So you actually have a better ROI on a cheap lead. It just requires you to dial more, but it's really good for practice. I started off with $5 leads 10 years ago. And then when I got better and had some money, I bought some more expensive leads. The only difference from an expensive lead and a cheaper lead is less dial time. But your ROI, your return on your investment is going to be higher on a cheaper lead because they're cheap. You just got to trade that for more dialing, right? But you don't want to mess up on a $60 lead. You're going to go broke pretty quick. So find your no's, guys. Be proud of them. If you're not getting no's in a day, if you're like, I don't know, Ryan, I only got 4 no's today. Today sucked. You didn't work. You got to be getting like 25 no's or 30 no's a day. Now you're working. Focus on getting no's and be proud that you got no's because that means you're working. That means the yeses are coming. Okay. Don't worry about you getting no's. That's a good thing. No's are part of the business. So if you're getting a lot of no's, that means you're working. That's a good thing. So count how many no's you can get in a day. Okay. When we're calling leads, make sure you call them 3 times in a row, 4 times in a day. Okay. People don't answer. If you're afraid to call a lead, you're calling it 1 time. And then you're like, I don't know. I don't want to piss them off. I don't want to call them again. They're never going to answer. We get too many telemarketing calls these days. They requested us to call them. It's not my fault they're not answering the phone. They requested it. We're not a telemarketer. They went, hey, give me a call. I want to know about life insurance. I want to know about mortgage protection. I want to know about final expense. Here's my phone number. Call me. It's not our fault they're not answering, right? So we call them 3 times in a row. Then we wait about 2 hours, call them again 3 times in a row, 2 hours, then 3 times in a row, 2 hours, then 3 times in a row. Call them 12 times a day. This is how you get them to answer and get callbacks. Now, 1 out of like 100 people is going to go, you're such a jerk. I can't believe you called me 12 times. but it's 1 out of 100. Do not worry about it. They're not going to get mad. And if they do get mad at you, you're just going to tell them, hey, you asked me to call you. So I kept calling you, weren't answering. We could have left me a voicemail. Yeah, my job is to talk to you. So yeah, and anyways, like I was calling you about that life insurance information you requested, right? They asked us to call them, so call a bunch of times. Otherwise, you're going to be sitting there dialing forever. If you got 12 calls, or you saw the same number calling you 12 times in a day, you're probably going to answer eventually. You're like, is this an emergency? I have no idea what's going on. Or you're going to call it back, right? If you want to spend, you know, if you want to cut your dial time down to 1/10 of the time, this is the key ingredient. 12 times in a day. Otherwise, you want to sit there and be afraid to call them. I mean, you're just going to get out of the business. You're going to waste so much time. So make sure you're hitting these guys up multiple times a day. Any questions on that? Any questions, guys? All right. Any objection you get on a script, say perfect, that's why I'm calling. Perfect. That's why I'm calling. Back to the script. Perfect. That's why I'm calling. Back to the script. Give you an example. We'll open this one up. Here is this one. Hi, George. The reason I'm calling is we just received that request you filled out online about the Arizona State life insurance programs. Hey, I don't have time to talk right now. Perfect. That's actually why I'm calling. Looks like we got your date of birth listed here at 6/21/81. We got that right? Yeah. How much does that cost? Perfect. That's why I'm calling. We'll actually have you off the phone in a second here. I just kind of let you know we processed that request and we're doing everything virtually now. So it takes about 10 minutes. Go ahead and grab a pen and paper so we get this out of the way. Yeah, I'm not interested. Perfect. That's actually why I'm calling. I want you to write down my information. My name is Ryan Reynolds. My state producer number is 1234567 with that number. That's all you got to do. Any objection at all? Perfect. That's why I'm calling. Back to your script. Don't give it a lot of breath. Don't give it a lot of breath, guys. The more breath you give it, the more needy you are. I've learned in my 11 years of experience that rebuttals they don't actually care. They're just testing you. They don't care about the answer. I've had so many people say they don't have time to talk, and then I just ignored it, and they talk to me. 90% of them, 90% of people say they don't have time to talk, and you just push through it. Perfect. That's why I'm calling. Keep going. They talk to you for 15 minutes. 15 minutes. They all have time to talk. If you don't have time to talk, you don't answer your phone, right? Who answers their phone if they don't have a couple minutes to talk? No one, right? So it's just objections that they're testing you on. You have to ignore them, and the script will answer all those anyways. It says right in the script, you know, that this is going to take a few minutes. Okay, so just perfect. That's why I'm calling. Back to your script. That's how you handle your objections. Okay. Find the need, guys. Find the need. Really important. We need to find the why and establish the need before we give options. The key is to ask questions, not make statements. Be curious and help. Do not sell or convince with statements. Okay. Our jobs are to ask questions, not say, hey, you know what? You're going to die tomorrow, George, and it's really important you have this in place. And, you know, you need to have this right now. So we're going to go ahead and sign this up. That's a statement, right? So we need to ask questions, right? You know, what would happen to you if you were to die tomorrow, George? Well, I don't know. You know, I guess I'd lose some money. How much money would you be losing? 30K. How's that going to affect Sally? Right? Questions, right? You're just being curious. You're not making statements. You're not trying to sell anything. You're just trying to help. You're like, okay, I mean, what's that situation look like? So here's some examples of some questions, right? We need to ask lots and lots of questions. Do not be a statement maker. Just ask questions. Okay, we're looking for one answer, two answers, right? Before we give options, we're looking for two answers. So we're asking lots of questions. They're either going to say, yeah, I don't think I want to protect my family. I don't care what happens to them if I'm gone. Okay, cool. I guess we don't need to give you options today, George. I don't know why you filled out a lead or had an appointment. Thanks for wasting my time. Or we're looking for, yes, I get it. It's important to have a place to see what it costs, right? We don't move on to our options and present options until we have one of these two answers. So we're asking lots of questions and studying these questions and finding the need. And then we're being problem solvers, right? We're going to be problem solvers. So look for one of these two answers. If you don't get one of these two answers, you haven't asked enough questions. So you got to dig in deep. Okay. So someone be my role play person. Who's brave enough? All right.
I'll do it.
All right, cool. Thank you. Okay, so why did you fill out the form?
I was curious.
You're curious? Okay, what kind of caught your curiosity?
Well, it says I can get $500,000 for $1.
$500,000 for $1? No, the ad didn't say $500,000 for $1. Where'd you see that at?
I could have swore that's what the ad said, or maybe I saw it on TV. I'm not sure.
Yeah, it might have been, I don't, that was probably some sort of bogus TV ad. Yeah, I don't know what that's all about, but so you want, there's no $500,000 for $1 policies. Yeah, is there someone you're looking to protect if something happened?
Well, I'd like to take care of my kids if something happened to me.
Gotcha. How old are the kids?
15 and 17.
Gotcha. And so are they working right now or no?
No, I'm not
Obviously,
asleep.
okay. And so if something happened to you, they'd be out of some money, correct?
Well, I want to make sure if they're in college or whatever, they don't have to drop out.
Gotcha. So it
Support
sounds like you're
themselves.
trying to say is like, hey, obviously kids are young. How much income would they be losing each year if you were to pass away?
You mean as far as my income, or
Right. Like how much do you make a year? Right.
150?
150. Okay. Yeah. That's going to put them in a tight spot. Okay. So some tax-free income would obviously help to make sure, sounds like to me, make sure that you go to college, make sure to be okay, if something did happen to you tomorrow, correct?
Right.
Okay. And then what kind of coverage do you have in place right now?
I have a small whole life policy.
Okay, cool. So if we find something that's cost effective, we're not going to get $500,000 for $1. I don't know where that's at, but whatever got us in touch with each other, that wasn't the ad. We don't lie about that stuff. It's all kind of based off of age and health. And we shop about 30 A-rated companies and kind of see what comes back the lowest. And that's kind of my job today. Okay. But if we can find something that budget to make sure those kids are protected, that's kind of the goal here, correct?
Correct.
Okay, so there you go. See, right? Asking lots of questions. So that's kind of how you want to do it. Okay, thank you for participating. Appreciate it. Did awesome. Awesome. Thank you, Elaine. Okay, now if you're trying to protect someone on the first call, okay, go right into the presentation. Don't ask if they have time to talk or anything like that, okay? If they don't have time to talk, say, perfect. That's why I'm calling. I just need to spend an hour doing some research anyways. That's the point of the call today. What's your medical background like? Any surgeries, any prescriptions? Kind of give me a general overview so I can start doing some research. Oh, I have diabetes. Okay, is it insulin? Yeah, okay, cool. When were you diagnosed? Oh, okay, at 35. Gotcha, okay. And then any surgeries, anything like that? Okay, any felonies, any kind of criminal background stuff you aware of? All right, great. And then when do you get home today? Oh, 6 o'clock? Okay. I don't have a 6 open. The next I have open is 7. I'm going to do about an hour of research for you. I'm glad I got this information away so I can do that. You're definitely going to answer the phone at 7 though, so I can get you these options, correct? Because I'm doing an hour of research. Okay, great. And your wife's definitely going to be there as well? Oh, she's going to go home till 8. Okay. Well, I'm glad we found that out. Let's push it to 8 o'clock then. I'm going to have to move this one around here real quick. Okay, so 8 o'clock for sure. You pick up the phone and we'll get these options for you before we do this research, correct? Great. All right, perfect. We'll talk to you then. Boom. Send them a text message. We created curiosity. Now they want to know the options, right? We created guilt because now they know we worked for an hour on their case, even though it probably takes 10 minutes. Okay, so that's how you want to handle if you can't present right away. Okay, if you guys like spending time on the phone, I don't know, you're crazy. So if you want to speed that up, get Phone Burner. Okay, it's $104 a month and you're gonna speed up your dial time. It's pretty awesome, okay? The one recommendation is in Phone Burner, you're gonna get these on a spreadsheet. It's gonna have like the numbers, the names, the birthday, all the information in one spreadsheet. Make 2 other columns and then copy the number part into those columns so they have 3 columns of numbers. When you load those into Phone Burner, that will automatically dial those numbers in that column 3 times in a row. Okay, so that's a quick tip. If you want to hire a dialer, you can. There's a virtual assistant. They cost $10 an hour. So you can set up that time. If you don't have funds to do that, you got to start yourself. Now, I recommend that you start dialing yourself no matter what, because becoming a good dialer is going to make you a good presenter. Okay, that they go hand in hand. So if you think you're going to hire someone to be a dialer without knowing how to dial first, you're probably never going to close anything. So I would get really good at dialing. Then when you want to save some time, you want to hire a dialer, you got some money coming in, you can hire a virtual assistant right here, which is pretty cool. All right, medical form. Any questions so far? Pausing for some questions. Making sense, guys? Perfect. Okay, good, good. All right, medical form, guys. This is the medical form I made. There is one obviously on a lot of other websites, but I think it's great. I think it's better. It's awesome. Obviously, I made it, so I think that, but I think you guys will like it too if you compare the other two. Really important part on this thing. Before you get into the medical, make sure you're telling people that, hey, I'm not the person approving this. This is up to the insurance companies. They will have access to your prescription records. They will have access to your medical records. If anything doesn't match what you tell me, you're going to be declined. Okay, so can you be honest with me? Something about this before you ask the medical, so you make sure they're telling you the truth, right? It sucks so much when you spend all this time giving them options, submitting a plan, and it's declined because the client lied to you, right? So make sure you're saying that line each time before you ask medical. This medical form, pretty self-explanatory, name, fill it out. Mortgage protection stuff, this is just if you have a mortgage protection lead, otherwise you can skip it. Okay, we got name, age, occupation, income, who's your beneficiary, who's your contingent. A contingent is in case something happens to, say my beneficiary was my wife. If me and my wife both die at the same time, then it goes to my daughter. That's the contingent. Height, weight, smoker, yes or no. What medications are you currently taking? What medications have you taken the last 7 years, right? You want to get the ones they used to take. Maybe they used to be on insulin, got off of it. They're going to see prescriptions the last 7 years. So really important question. Do you put anything to monthly savings? Great question. Why put $200 a month into monthly savings? Now you know you got some money spent on life insurance, right? Well, hey, George, you're putting $200 into the savings account and it's only worth 200. Why don't we put $100 into this whole life savings account? Now it's worth, $30,000 right away. Or why don't we put $100 into this return of premium life insurance plan? You get all the money back anyways. Now it's worth $200,000. Or why don't we put that $100 into a plan over here where now you have a term policy for 20 years worth 200 grand, right? So it's a great question. What life insurance do you have, right, in place, right? If it's a work policy, hey, that's great. You have a work policy. We don't consider those because they're not guaranteed. You have to be working for that to be in effect. So if you get sick, you can't go to work, you get fired, you don't have coverage. Okay. I have a widow that I talked to one time, true story, you can tell your clients that they had a house. They said, we don't need coverage. We got a work plan. We're awesome. We're gonna put extra money towards the mortgage and, we're gonna pay off the house quicker. Guy got cancer. What couldn't go to work? He's getting chemo. Policy got dropped, died in month 9. Widow lost the house. Okay, so work policies have stipulations. We're talking about private coverage because we want to cover all of our bases and not rely on a job to make sure we're protected. Okay, or if we retire, now our health is worse. Now we got to look at coverage that are 3 times more expensive. So age and health reflect on our price. Now it's on sale. Let's lock it in. Do anything that acts like insurance. This is how we find our annuities. Medical questions. Read these things really quick. Any COVID in the last year, last 10 years, any blood pressure, heart attack, stent, congestive heart failure, bypass, pacemaker, regular heartbeat, cancer, stroke, oxygen, inhaler, asthma, COPD, diabetes, pills, or insulin, any of that stuff. How about diabetic neuropathy, HIV, AIDS, liver disease, kidney disease? Can you put that on mute? Disease, hepatitis C, lupus, depression, bipolar, mental disorders, PTSD, pain management, nerve pain, addictions to drugs or alcohol, felony DUI, or collecting disability. Usually I break this section up into 3 sections and just read those things really quick. Circle the ones they have. Any surgeries or hospitalizations for you in the last 10 years. Write them all down in here. This is all your notes, right? This gives you.
I have a question.
Yeah, go ahead.
If they've had COVID, they'll deny them?
In the last 3 months, some carriers don't ask
What
about
happened?
COVID, like John Hancock.
Okay.
So some carriers, and you can ask me later on that stuff too. But yeah, some carriers don't. John Hancock doesn't, so we're good to go on Jan Hancock. But yeah, if you can mute yourself again, that'd be great. All right, cool. So good question though. Okay, so what to write, guys? So this is basic training. Okay, I don't want you guys to be overwhelmed on, you know, what to write. Okay, so we're just gonna make it really simple for you. On a final expense lead, we can only write one type of insurance. It's going to be a whole life policy. Okay, because final expense is to cover final expenses. That's when we die, like our last expenses. So just remember, final expense leads, only whole life. On life insurance and mortgage protection, we're going to stick to these guides, these age brackets. Okay, so if you have someone between 18 and 40, who can answer the question first? What are we going to write that person between 18 and 40? Someone on mute.
CBO 100.
All right, Elaine, you're the brave one, so I'm going to pick on you. CBO 100, right? What's the term length?
20 years.
It's a 30-year term.
30.
Oh, 30 year.
30-year term. Good,
Oh,
good.
done.
The 30-year term, does it have money back or no money back?
With money back.
Does have money back, yeah. So the Marico CB 100. So quick question, Elaine. I have someone that's 25. What product do you think I'm going to offer them first?
The CBO 100. 30 year.
That's it. So when you're like, I don't know what to do, I'm in an appointment, God, I don't know what to offer these guys. Just look at their age, and then you know you're going with CB 100 based on the age, right? 30-year with money back. Why write this, guys? Because in this age bracket, the cashback options are priced well enough that the client can get an affordable premium with their money back, thus making the policy free. 30-year terms are cheaper than cashback 20-year terms. That's why we're doing 30. Just makes it a little more affordable, okay, than a 20-year return of premium. What does it feature? CBO stands for cashback option, 100% cashback. Comes with critical illness, chronic illness. Critical illness allows the client to access the policy while living if they get cancer or have a stroke or have a heart attack. Chronic illness allows the client to access the policy if they need help with 2 daily living activities, like getting out of bed, a chair, toilet, bathing. Could be from a disease, could be from a car accident, but now they have access to this policy. So with that guy that had cancer, that lost his house, he would now have access to $200,000 tax-free. That was the policy. That'd help him out a lot, right? It's a huge living benefits. So these critical chronic illnesses are great. Good questions asked the client. Elaine, if you get all your money back, how much do you pay for the policy?
0.
If you get something for 0, what do you call that?
Free.
So this is a free policy. Okay, so what are your concerns? What do you need to think about again? Is saving your own money, worth protecting your family?
Absolutely.
I don't know. I don't know why people say no to it, right? So believe in the product, understand the product, and it's easy to sell. All right. Amy, you're on here, right? Amy. All right. I got someone that is 55 years old. What product am I going to go with?
The term 125,
What's the term length?
20 year.
20 years. Is that money back?
No,
No money back. All right. I got someone that's 59 years old. What am I going to go with?
same thing.
Same thing. I got someone that's 20. I got someone that's 39 years old. What product do you think I'm going to go with?
CBO 100.
All right. Well, we got now from 18 to 60, guys. We know exactly what to write. Easy peasy. We don't have to stress out. We can learn the other products later. Americo, we get contracted within a week so we can start making money and working. Let's stop procrastinating. Let's buy some leads, get out there and learn this business. Let's stop waiting, okay? So this should take some anxiety out of it, okay? Now, Amy, I'm gonna pick on you again. I got someone that's 75 years old. 75, what product are you writing?
Whole life.
Whole life, what's it called?
Americo Eagle.
There we go. So we just got to learn Americo products. Awesome. So let's go over the term 125. Why write this? In this age bracket, the money back option and 30-year terms are too expensive. Okay. So we write the 20-year term, you get the price point right. Okay, why is it expensive? Because at 50 years old, they're covering the client all the way to 80. What are the odds of outliving 80? Pretty slim, right? So that's why the insurance companies charge a lot. But if I have a 20-year 50 to 70, there's better odds of an outlive 70, which makes it cheaper, right? So 20-year terms between this age bracket gets our price point right. Good questions to ask the client. Amy, if you were to die tomorrow, would $100,000 help out your husband tax-free?
Definitely.
Okay. Can you guarantee that you won't die in the future?
No.
Is this small fraction of your monthly expense, your monthly income, sorry, a good investment to guarantee your family will be financially secure no matter what?
Absolutely.
Oh, I got it sold. All right, cool. Sell it before you present, guys. These are good questions to ask the client. Okay. Features, 25% extra accidental coverage. So the 125 stands for that. If you have a $100,000 policy, if they die of an accident, you get 125,000. Make sense? Okay. If you have a $200,000 policy, they get 250. Okay. Comes with critical chronic illness. We went over that. Okay. Earlier. If you want to write the term 100, you can, but it pays 20% less commission. And you guys are brand new, so we need to make money so we can buy more leads and reinvest. So that's why we're offering the 125. Once you have John Hancock, you call these guys every day. It takes about 6 weeks. You can replace the 40 to 60 bracket 20-year term with John Hancock. It's a really easy e-app. So once you have John Hancock, instead of writing America 125, you write John Hancock. But this can take 6 weeks, okay? Whole life. Why write this? Whole life policy lasts for the client's whole life, guaranteed payout. It's the only insurance that exists that it's guaranteed to pay out. Health insurance, maybe you're never getting healthy. Car insurance, maybe you're getting a wreck. Homeowners insurance, maybe there's never a fire. Term insurance, I outlive it. Accidental, I don't die of an accident. There's only one insurance that's going to pay out no matter what. Whole life. What's the chances, Amy, of us dying in our whole life?
You're going to.
100%, right? So what are the chances of the policy paying out?
100%.
So what are the chances of you wasting money in this policy?
0.
Whole life, right? These are really no-brainer products, guys, okay? So believe in the products, easy to sell. Features, double payout if they die of an accident, automatically built in, pretty cool. Once you get Aetna, you can replace the Eagle. For now, we're just gonna write Eagle. So we have one carrier to call and check on our policies, always America. Okay, what's this one down here all about? Amy, you got any clue? What's this fourth product? We're only writing 4 products, nice and simple. Take the anxiety out of it. What do you think this one down here is all about?
Well, it's an add-on.
It can be an add-on, yeah. So we can add it on, and or if they can't qualify for term or whole life, we can write accidental. Okay, so maybe they're too unhealthy for this, right? Maybe they're too unhealthy for this. Maybe they're too unhealthy for this. Then I'm going to go to the accidental, as long as they're between 18 and 70. So we can always, go to this next one. So why write this? Everyone's approved. Everyone's approved. Doesn't matter if they have a DUI. Doesn't matter if they robbed a bank yesterday. Doesn't matter if they have felonies. Doesn't matter if they're on their deathbed. There's no medical questions. So everyone's approved. It's a cheap option with a lot of coverage. For instance, you can put a husband and wife on one policy. It's fast. It's an e-app. It's very simple. Some features, it pays 25 additional if they die of an auto-related death. So if they're a passenger, driver, hit by a car, you have a $100,000 policy. Now they're getting $125,000. If you have a $500,000 policy, which is the max, it goes up to $500,000. Now they have $600,000. Pretty cool. Free rider built into that. If they die of public transportation, it pays out double. So you sell them $500,000, airplane crash, train crash, bus crash, public transportation pays out $1 million, doubles it up. Okay, it goes up to $500,000, which sounds great. So I always offer it. Hey, you want the $500,000 plan? That's what we recommend. Or do you want the $250,000 plan, right? Great for add-ons, right? So you sold a term, you sold a whole life. Hey, that's awesome. So we're gonna get $30,000 a whole life, George. I know you're 65. Just want to let you know you did qualify for the $500,000 additional accidental and also the $250,000 additional accidental. So we do have the $500,000 for $60 extra, and then we also have the $250,000 for $30. Which one did you want to add on since you qualify for that? Oh, the $250,000. Okay, cool. Let me go ahead and write that one up too. Bam, that easy. All right, pop quiz. Pop quiz. Elaine. You there?
Yes.
All right, let's see if you can do it without looking. I'll pull it down if we need to. I'll pull it down if we need to. Someone is 25 years old. What product am I gonna write?
CBO 100.
Bam. Does it have cash back?
Yes.
What's the term length?
30.
Bam. All right. I got someone that's 55 years old. What am I gonna write?
The other America. You don't remember what it was.
The term 125.
125.
All right. What's the term length?
20 years.
All right. Does it have cash back?
No.
All right. I got someone that is 75 years old. What am I gonna write?
Whole life.
All right. What's it called? Whoop.
Whole life.
It's called the Eagle.
Oh, the Eagle. Sorry.
Miracle Eagle. It's called the Eagle Premier, actually. I probably should add Premier in there. All right. If they can't qualify for something on those products, they can't qualify. What can I know I can write?
The accidental.
The accidental. Yep, you got it. So we can always sell something unless they're like 70 plus 71 and up, then, you know, maybe I can't, but you know, then we can always write them a whole life graded or something like that. Okay. So steps to qualify. Any questions on how, figuring out what to write? So just 4 products, guys. It really, you know, I have people call me all the time. Well, I just don't know what to do. I don't know what to write. It's right here. Okay. And if you guys forget what to do when you guys are quoting stuff on this quote tool over here, there's a quick reference. If we go down below, you can see it's a quick reference. 18 to 40, 30 years money back. 46 to 20 year no money back. Okay, as you start writing some more products, you can pick different ones, but we're just always sticking to this when we start off. And the price points are going to work out perfectly for you to not have to think about it. Okay, it's going to take a lot of that stress out of it. Okay. Any questions for on what to write?
No, when you said when we get another carrier to rewrite it, so do you get charged back on the other carrier, wouldn't you?
I guess I'm confused on the question.
Where you said something about write this with America, but when you get the John Hancock, rewrite it.
Oh, I'm just saying replace it. Make it that your go-to. So when you have someone between great question 40 to 60, instead of going, I know I'm going to go to America 125.
Oh, I see. Okay,
John
so you
Hancock.
weren't saying take them out of that. You were just
Yeah,
saying.
you can pick
Okay.
your 4 categories and just write four. I mean, I typically write, you know, four main policies all the time. I mean, maybe 10% of the time I have to write something else because, you know, just because of medical, which we're going to
Sure.
go over in a second here. But yeah, pick your main 4. And so, you know, when you get John Hancock, you're like, all right, I know between 18 and 40, I'm going CB 100. Now I know between 40 and 60, I'm going John Hancock. Now I know between 60 and 80, I'm going Aetna. But for now, we're going to start with America. So you only have 1 carrier to worry about and 1 carrier to call and check on your pending business. So
Yeah,
makes it
I'm
nice.
gonna tell you, I have somebody, he's 26, no health issues, but he's like 6'3", 400 pounds.
Okay, so he's going to be outside the build charts, which we're going to check in a second. Here's the cheat sheet. Let's go look at it. All the way to the very bottom, we have some weight charts here, and we got 6'3", 340. So it says he can't qualify. So what can he get?
AIG. Oh, accidental, sorry.
Bam, accidental. That's right. Then we go to accidental. Perfect. Okay, so steps to qualify. What prescriptions do they take? Ask prescriptions. Google the prescription names. Don't trust the client. I can't tell you how many people go, oh yeah, I'm just taking this. It's just for, you know, it's a sleeping aid. And I look it up. It's for like, it's like for schizophrenia or something. Okay, so don't trust the client. Google it and find out what it is. Eventually you're gonna start kind of learning, you know, common prescription names. Pretty much like 80% of the ones you get are pretty common. And then 20% of them you'll have to Google still, but you'll start learning these things as you're Googling it. So just type in the prescription name, Google it real quick, see what it's used for. So at least you have an idea of what it can be used for. Ask some medical background questions. We went over that earlier. It's all these questions right here. Ask about the surgeries, right? Again, it's on the medical form right here. Okay. Ask about the surgeries. and then use the cheat sheets. It's really that simple, guys. Now they do have on Slack, they have an underwriting genie that you can message and put in all this stuff that you just collected, and it will tell you what to write. But with my team, I'm going to teach you how to fish. Teach you guys how to fish, okay? Not, you know, and so you don't have to use underwriting genie. You don't have to call me in the appointment and go, I don't know what to do. We're going to teach you right now. It's not rocket science. This part could be a little confusing. So I'm going to need you guys' help asking some good questions on this stuff so we can make sure that we're all learning and understanding, okay? So please speak up in this part if anything that's confusing. Okay, so on the term cheat sheet, term between 18 and 60. On the term cheat sheet, if it says decline, we know we have to offer accidental or decline on weight. We just did that, right? If it says not asked, that means it's not a medical question that's asked on there. We can write the term. It means they qualify. We'll do some examples in a second. On the whole life cheat sheet, if it says guaranteed, ROP, modified, or graded, offer accidental. We're going to go over this in a second here. If it says preferred, standard, not asked, or immediate, write whole life. Okay. If you can't remember this stuff, when you're pricing on your cheat sheets, there's quick notes right here. See? You can always reference it. Before you go to cheat sheet, you can come back and look at this. All right, back to protect the family training, back to where we're at. Okay, so let's go back and to explain why we want to go accidental on a whole life policy. If it says guarantee RP greater modified. Okay, cool. Check this out. On a whole life cheat sheet, if it says guaranteed, kind of confusing. It sounds like it's just guarantee approved, but it means something different. ROP graded or modified. All these terms essentially mean the same thing. Different carriers, for some reason, have different terms they use for rating classes, but they all mean the same thing. Confusing, I know, but here's some of what those rating classes mean. If the client dies of natural causes in the first 2 years, the death benefit will not pay out, but will pay out if they die of an accident. Okay. If they do die of natural causes the first 2 years, their premiums will be returned to the beneficiary plus 10% interest. So basically what it says is that if they're rated a guaranteed ROP or graded modified rating, then they won't even get a payout for 2 years if they die of a heart attack or cancer. They only have accidental. That's it. They have accidental for 2 years. So if they only can get an accidental policy for 2 years, why don't I write them an accidental policy for more coverage for cheaper, come out and revisit that client in like a year or two, and then get them a better policy, right? Okay, so you know, if the client can only get accidental for the first 2 years, then why not write mutual involvement accidental, revisit them in a year or two and see if you can get a better policy. This way the client gets more coverage at a more affordable premium, and you get more commission, and you get more requests and help more people. This is a win-win because graded, guaranteed RP graded, modified the 2-year waiting period policies. So term cheat sheet, let's do some tests here. So remember, between 18 and 60. All right, Amy, I'll ask you a question. So let's just say the person is, let's say the person is 25 years old. What kind of products am I going to probably write them first? What am I going with? Oh, you're on mute. You're on mute, by the way.
CBO 100.
Correct. We're going to go with the CBO 100, CBO 100. So we start with the CBO 100 because we're like, okay, the guy's 25. I'm going to see if I can write a CBO 100 because he's in this age bracket. If he can't get it qualified for this age bracket, then I'm going to go with the mutual involvement accidental. Okay. It's very simple. Okay, cool. So then we go back to our term sheet. The guy's on, I think we're right here. Wait, we're here. So this is the term cheat sheet, clicking on that. And we go to high blood pressure. The guy's 25 years old and he's on high blood pressure. Am I going to go with the term or am I going to go with the accidental?
The term.
The term, why is that?
Because he's under the age of 30.
So it's actually going to be the accidental. So the diagnosed prior to age 30 decline.
Oh, okay.
Yeah, and I'm doing this for a reason so we can start catching this stuff. So he's 25, he's below the age of 30, so we know it's going to be decline. So if it's decline, I know automatically switch and transition to go, hey, the product we have, it's really great. It's a $500,000 of coverage for the accidental. Make sense? All right, let's just say the guy is 45 years old. What product am I going to try to write first, Amy?
The term 125.
You got it. Yep. The term 125 between 40 and 60. Is it how long is the term?
20 year.
20 years. Does that have money back?
No.
All right. And then we find out he's taking a high blood pressure pill and he's 45. So we got to go the term sheet, high blood pressure. And and you go, hey, when were you diagnosed with blood pressure? And he says, I was diagnosed when I was 40. And he's taking 2 blood pressure pills. Am I going to go with the term or am I going to go with the accidental?
The term on that one.
The term on that one. Yep, because it says taking 3 or more medication to control decline, but he's only taking 2. He got diagnosed when he's 40. So we're good to go, right? Let's just say, when we diagnosed, it was 2 months ago. I just started taking these blood pressure pills. Am I going to go with the term 125 or am I going to go with the accidental?
The term.
You're going to go with the accidental. It says diagnosed in the last 4 months.
4
Decline.
months. Okay.
So it was 2 months ago. Yeah. So take your time, read this stuff. The reason I'm doing this, and thank you for participating, is it can be a little confusing at first, right? But as we kind of practice, this stuff starts to make a lot more sense. Let's just say he's 55 years old and they say he had a heart attack.
That's declined.
So what do we go with?
The accidental.
Let's say he's taking something for gout.
They don't ask that, so term.
So we're good to go with whatever one, right? Depending on if it's the CBO 100, 18 to 40, or the term 125, 40 to 60, right? So gout's not a big deal. Let's say he had a felony 7 years ago.
Declined.
So what product am I writing?
Accidental.
Mutual of Omaha, guaranteed advantage, accidental. You got it. The $500,000, the $250,000. A common one, guys. The most common stuff we're going to get is blood pressure. And then another one is diabetes. So let's go look at diabetes. Let's say that they were diagnosed with diabetes. Let's say they're 45 years old and they started taking diabetes medications when they were 34 years old. Am I going to go with an accidental or am I going with the term CBO 100?
Accidental, because it's before 35.
You got it. You're catching on now. I like it. All right. Let's just say the person's taking some insulin. He's 55 years old. We're trying to do the 20-year term, no cash back, the 125 for now, the America 125, making our job simple here. Are we going to go with that 125 or the Mutual of Omaha accidental?
Well, it says insulin decline, so accidental.
There we go. Okay, guys. So most of this stuff it's pretty. I'm going to go through the most common ones we run into. Obviously, any kind of heart surgeries, declines. Okay, blood pressure, diabetes. We did those ones. Any illegal drugs. So anyone with your rehab decline, we don't run into that too often. Kidney failure decline, lupus decline, multiple sclerosis decline, any kind of, again, pacemakers, that's serious stuff, Parkinson's. So any major stuff here, guys, think if they're unhealthy, they're probably gonna decline, okay?
Well, marijuana is a common one.
Marijuana decline on this one, yep. So we have to go with accidental. We're just trying to keep it simple. There is some that don't ask about marijuana. So let's go look at the marijuana one because that's a fun one to look at. Have it on there?
Yeah.
Where's marijuana? Oh, there we go. Marijuana use. Okay, cool. So marijuana use. Recommended purchase in 24 months decline. They're not going to really know unless they have a prescription for it. Most places are recreational. Probably not.
So there's no blood work or peeing in the cup.
Nothing like that. But here's a perfect example that eventually, as you get more comfortable, we can look at these other columns. Marijuana use, not asked. So I could go with this one. Not asked. And go with this one. See drug use. Oh man, what's drug use mean? Okay, weird. Drug use. See drug use. So is there a thing that says drug use? Let's see that. Drug use, treatment. Any history of treatment for alcohol or substance abuse decline. So it looks like we're good to go, John Hancock. They're probably not doing that for alcohol or substance abuse. So this is our charts, guys. So pretty cool. Any questions on the term? I'm going to close that one down. Making sense? Okay. So whole life. Now we got people that are between 60 and 80, trying to take one with a whole life, the Eagle Premier. And if it says guaranteed ROP modified or graded, we want to go accidental. If it doesn't say that, unless Danny, unless you want to go that route, you can. Like I said, it's up to you guys. But that's what I do. Okay. If it's final expense, then you have to go with whatever. It's always a whole life. You can't go accidental. It doesn't make sense, or term. So if you got a final expense lead, always whole life, always where the rating class is. Okay. All right. So let's go look at the cheat sheets. Whole life cheat sheet. All right. Elaine, you there, Elaine?
Yes.
All right, Elaine. So let's go to diabetes. Again, most common ones. Let's say we're trying to remember just the first column, guys, America, making our job easy and not stressful. Okay, there's some people that still write only America and they started 2 years ago. You can do everything with just America if you want. Okay, you can naturally learn these other these companies later. Don't stress yourself out. Okay, so diabetes. The person's taking insulin. Do you think they get approved?
Yes.
They would get approved. Yep. So any diabetes issues, you're okay. What if they have a diabetic complication like diabetic neuropathy?
No.
They wouldn't. Why is that?
It would be modified. So we'd have to do the accidental.
It would be modified. Yep. So guaranteed means 2-year waiting period. So there it says within 2 years, you know, if they have neuropathy, they usually pretty much have it forever. Let's just say they had insulin shock and it was 3 years ago. Well, now we're good to go, right? So it's within 2 years, right? So diabetes complications. Let's go to blood pressure. Where's blood pressure at? High blood pressure, high blood pressure. Oh, they don't have it. So if it's not on here, it's not a big deal. High blood pressure does not matter when it comes to whole lives. What about Elaine? You there?
Yeah.
What if they had a heart attack 3 years ago?
They're good to go.
Can write it. What if they had it 6 months ago?
No.
Nope, can't write it. So I'm gonna go through all these. We'll do the most common ones we run into. AFib, not a big deal, really cool. Back in the day, it used to be declines across everybody. Now they're not thinking it's a big deal. So pretty cool. Regular heartbeat, AFib, atrial fibrillation, all same thing. We see that all the time. Angina, this is a big one. And a lot of times people have like a medication that they're taking just in case they have an angina attack. So you got to Google the meds. If they've gotten it prescribed within the last year, got to go accidental. Let's get another good one. Asthma.
Is that like your nitro and your isosorbide?
Yep, you named it. Yep, you got it. So if they did a prescription for nitro in the last year, go accidental. Bipolar, all these things, not a big deal. Blood clots, if they started taking it like in the last year, probably, or had a stent recently from it, probably that would be a decline, but if they've had it for over a year, good to go. Cancers, okay, in the last 2 years, decline, but over 2 years, good. You know, when I first started writing business, it used to be 4 years you'd be cancer-free. Now it's 2 years, is pretty cool. So this will be 2 years since they've had cancer treatment, anything like that. Basal cells, not a big deal. Let's go congestive heart failure, always accidental. Okay, or a 2-year waiting period. So in that case, if you want, you can write an accidental and that. I'd probably write both because the guy's not going to probably come out of heart failure. COPD, got to go accidental. But here's a cool thing. COPD, I always go Aetna because it's a standard pricing. So they get immediate coverage, not a 2-year waiting period. So that's a good example. We start using our columns. So once you get Aetna, a lot of the things that maybe aren't allowed on America, they're allowed on Aetna, and the things that aren't allowed on Aetna are allowed on America. Like, let's go to we'll get down to the heart surgery. Depression, not a big deal. DUI is not a big deal. Not asked. Actually, this was 2 years, so we can't do that on Aetna. Let's do heart attacks. So heart attacks has to be 2 years for preferred. Only 1 year, it's automatically a better rate. So standard, this is preferred. It's kind of, this one only has preferred again, or 2-year waiting period. Aetna has 2 rating classes, preferred and standard. So they both are immediate coverage, just standard's a little more expensive. So between these two, America is actually going to be cost effective. You can always price them both out. Okay, so this would be a standard if it's within a year, preferred over 2 years. Regular heartbeat, that one's good. Liver disease, you're stuck, that one's bad. It's just standard. Foresters, we don't really have foresters. Pacemaker, within a year you got installed, bad. PTSD, this used to be a big deal back in the day. Now it's allowed in a lot of carriers, pretty cool. Schizophrenia, strokes within a year, again, that'd be a good place to write accidental. I had a stroke 9 months ago. Cool, I had a stroke last month. Cool, starts with accidental. Revisit you next year, we'll get you a better plan. Sound fair? Sounds fair. All right, make sure you check your weight charts down here, and then we're done. Okay, questions, guys. Questions. Good questions. Any questions? Challenging questions? Love it. All of them are good. Danny, you got a challenging question? I'm ready for you, brother.
For
Nothing?
most of them, if they have cancer, it will be declined, right?
Let's go look at it. So they got cancer, like, oh, they currently have cancer, right? Is that your question?
Yeah.
All right, so we're gonna go down to cancer. Says within 2 years, guaranteed issues.
So I see that it's declined across the board. Is there any carriers that will like accept them?
Nope, it would be AIG or accidental. AIG is our guaranteed issues, no medical questions. So you can go with AIG, no medical questions. That's still a 2-year waiting period. You can go that route, but it has to be over 2 years here. Otherwise, you know, you're bad to go. So less than 2 years says, yeah, so decline. So metastatic reoccurring decline within 2 years, guaranteed issue. So 2-year waiting period on this one. And AIG has the cheapest 2-year waiting period. So if you ever have to write a guaranteed issue policy with a 2-year waiting period, AIG is the most cost effective. If you do have to do with a graded policy, a quick tip, Aetna is the only carrier that doesn't have a commission drop. It still pays you full commission. So if you're at 100% commission, a lot of these carriers drop in commission. This one will pay you 100% commission still with a 2-year waiting period. So I never go with AIG, I just go with Aetna. Because I want to make the most money possible so I can help the most families and buy more client requests. And that's how I do it. Cool, man. So the next thing we do, right? So now we know what to do. We figured out where we're going to go. We're going to figure out if I have to go an accidental route, or we're going to figure out if I'm going to go the term route, right? Or a whole life route. You know, we know which of these 4 products we're going to write. One of these 3 or the accidental. Okay. And then the quote tools are right here. We quote it. You can play with that. It's pretty self-explanatory. And then the next step is giving us some options, right? And I only give 2 options. Only give 2 options. Make it nice and simple choice for them. The simpler we can make this, the more chances that we are going to have someone that's going to buy a policy, okay? So start with the highest cost option first, and then work your way down in price. Only give the same product. So if I decided out of those 4 products, I'm going to go the term 125, well, the first option is going to be the 125 and the second option is going to be 125. Simplicity is key. Okay. If we make this too complex, we're never going to get started. We're not going to make any money. So keep this simple, guys. Just get in a rhythm, keep it simple, take away the anxiety, try to go out there and help some people. So same product, each option. On the second option, do not change the product, term length, or riders. Don't change those. Okay, don't change those term, you know, the product. So you don't want to go, hey, this is a term 125, it's 20 years. This one's a 30-year no cash back. This one does have cash back. This one does come with a, oh, this other option over here, it does have a disability, but then we could go with the whole life, or do you want to do the, we have an accidental as well. So I got the accidental, the 20 or the 30 year, this one has disability, this one doesn't. You're overwhelming with choices, okay? So whatever I offer on the second one, let's just say it was one with disability with accidental, then the second one has disability with accidental. If the first one has a 30 year, the second one's a 30 year. If the first one has cash back, the second one has cash back. Okay, the only thing I'm changing is the coverage amount,
Right.
which reduces the cost, which makes it easy for the client to understand and make a choice. Once they understand the second one, they understand, I'm sorry, the first one, they understand the second one, right? So here's an example. CBO 100, 500,000 accidental if you die of an accident, 250 full coverage, any death at all, you get 250,000. If you die of an accident, $500,000. Comes with critical chronic illness, explain those, 100% cash back, 30 year, 170. Okay. Any questions about that? Great. Explain it again. Maybe say it again. Again, 500,000, blah, blah, blah. Now our next option here is we're just cutting it in half. Okay. So instead of 500 accidental, we're doing 250. Instead of 250, we're doing 125. Okay. Still same riders, all money back, 30 years, it's 88.75. Okay, so which one of these money back options do you want? Do you want the 500, 250 or the 250, 125? I got one for 170 and one for 88.75. Okay, we can't make a decision today, but which one do you think makes the most sense? Okay, so nice and easy options, right? I'm not changing too much. Quick tip, do not go above 250 on the CBO 100. Okay, if you go above 250, it requires a swab test. That's the max coverage you can do. You can add on riders like disability and accidental. You can always double it. So if you want to add on an accidental rider, you can add on that. You get 250, any death at all, and then you add on another 250, get to 500. So you can add an accidental. You can add disability on. If you want to add disability on, just make sure that whatever riders you add on, they're on the second option too. So it's nice and easy for the client to understand. Okay. Any questions on that?
What about I saw one today that says 10 pay. Is that just basically they pay 10 times and that's it?
Yeah, it's a 10-day pay up. I've never written one in my life, but yeah, it'd be a whole life policy, pay for 10 years. It's more expensive. So you have to have kind of a savvy client for that, but typically you're not going to write that.
So it's 10 years, not 10 months.
10 years, correct. It's a
Okay.
whole life policy, yeah.
Gotcha. Okay.
10-year paid up, yeah. So more advanced stuff. Again, when we're starting off, keep it simple, guys. You can learn all the other stuff, ask questions on the role play call. Nice and simple so we can get you guys out there learning and writing. All right, so remember, between 18 and 40, we got 35-year-olds. So I know I'm going to CBO 100, right? On this 52-year-old, it's a 20-year term. Now I don't have the 125 here, but I'm kind of showing you that eventually you're going to start writing other products, but you're still going to stay in that bracket. It's a 20-year term, no money back, right? Stay in that same bracket. 20-year term, no money back, right? So we can change up the product, but it's a 20-year term, no money back. Start with America 125, maybe someday down the road, you write the John Hancock one, maybe you're writing the Home Protector, maybe write Mutual Loma, whatever the case may be. Find the ones you like, but you'd be really good to go off with America at start because it's easy to understand. It's a great company. Okay, so $200,000 of full coverage. Goes for 20 years, comes with confined care 2.5% and chronic illness, 20-year term for 166. Next one's 100,000, 20-year term for 89. Which one makes more sense? Nice and simple for the client.
What is
Whole
the
life.
confined care?
What's that?
What is the confined care? 2.5%.
Confined care is if they went to a nursing home, they would get access to 2.5% a month.
The policy of the policy.
Yeah, so if they had 100,000, they get 2,500 a month for confined
Okay,
care.
gotcha.
Yeah.
That'll
Great
pay
question.
for maybe a few lunches.
What's that?
I said that'll pay for maybe a week's worth of lunches.
Yeah, I mean, confined care is like $6,000. Yeah, exactly. So, but it's a rider, and you can Google again, you guys are starting off with these products. Here's the features. If you have any questions about any product, just Google it. I just go, hey, American Animal Home Protector agent guide. and you can read all about it if you want. But these are the riders. See, the riders are the same. Okay, from each product. Good question though. Okay, 65-year-old. 65-year-old male. We're going with the American Amicable Senior Choice. Just showing you that you can go with other options. Obviously, we're going to start off with just the Eagle, right? But just showing you eventually you're going to write others. There's lots of whole lives. Well, let's just say we wrote this whole life. Okay? 60,000 accidental, 30,000 full coverage, last your whole life, coverage lock, price locks, 181. Second option, 30,000, 15,000, last whole life, 92. Which option makes most sense, right? So you're keeping it the same type of product, same riders. The only thing you're doing is reducing the cost, which reduces the price. Easy for the client to understand, easy for them to make a choice. Let's just say they still need to think about it. Maybe it's price. Okay, cool. Now I just reduce it again. How about a 2010? That brings it down to 60 bucks. Oh, I don't know. So you're saying your family's not worth 60 bucks a month to make sure they're okay. Is that what you're saying? Yeah, I don't know. I mean, I like McDonald's better than my family. Okay, well, how about a 5,000 policy straight up for 32 bucks? Is your family not worth 32 bucks? I guess we can start there, Ryan. Okay. So you can always reduce it, okay? Keep reducing it if you need to. That's what the third option's for.
So Ryan, question.
Yeah.
When you're taking the time to, okay, are you doing your quotes before you get on the call?
Are we doing our quotes?
Are you figuring out how much they're gonna be, that it's gonna cost before you start the meeting on the phone? Or
No. So yeah, we're going right in order. So let's do a recap.
okay. So then my
Yeah.
next question is, do you automatically add it in if the plan does have accidental death before you give them a cost?
No, I'm gonna sell that first, and then I'll add that in later. Like once I have that sold, then I'll go, hey, you did qualify for the $500,000 rider. It's 60 bucks. You want to do that, or the $250,000 for 30 bucks? So that's how I add on mutual BOMA. Does that make sense?
Right,
Like
right.
selling
So
them first on picking one of those and then adding it. Is that what your question was?
yeah, because some people do it the same ways, but like, just like the gal today, what, Marcy, or right? Yeah, she starts with accidental death too. So it's like you automatically qualify for this. It's really inexpensive. It's only 90 bucks.
No, I don't do that. I don't do that. You can, like I said, I would just stick with the full coverage if you can do full coverage.
Yeah,
Okay.
I always do it secondary.
Yeah, secondary. Okay, so full coverage first. Get them in full coverage because someone's going to come in behind you and offer that, and you're going to get it replaced. So don't offer accidental first unless you have to. If they can't qualify for it, then you do it. So again, steps here. We're going to do a real quick presentation. We're going to do that. Next step is doing your medical form. You're asking the medical questions to figure out what they can qualify for. Then you know what you're going to look for, what product. Between 1840, we're going with a 30-year term, or we're going this route with the America, or we're going this route with the whole life. So now I know what I'm going to try to get them. If they can't qualify for it, I know I'm going accidental. Steps to qualify, look at the cheat sheets. It says decline. I'm like, okay, I got to go accidental. It says it's approved. Now I know can go with this product in this age bracket, this product in this age bracket, this product in this age bracket. Now I can start pricing it. I can go to my quote tool. I can figure out two options. Start with a high option first, and then keep the product exactly the same, and then reduce it down the coverage amount, give them the second option. So that's where we're at. Right? Now they have the options written down, the close. We can't make a decision today because we don't know if we're going to qualify. But if you were to qualify, which one of these makes the most sense, based off protection and affordability? And then we be quiet, right? Confidence is being quiet. You saw today, if you guys were on the training call, when I was sitting in front of the front row, I said, ask her to think about it, see how she responds. And I think the really interesting thing was that she didn't respond right away. She was okay with 4 seconds of quiet to think about the proper response. So confidence is quiet. Don't be nervous, guys. Okay, give them some time to think. The first person that talks loses. Okay, give them some time to think. In your head, you're like, oh man, I got to make a sale. Man, I hope I didn't mess this up. And their head, they're thinking like, what can I afford? Can I stop making this payment over here? Maybe I don't have to get Starbucks on Tuesdays. How much is my family actually worth? Do I love them enough? You know, they're having a huge conversation. So give them some time to think, guys. If you interrupt them, you're going to lose. So give them, be quiet. Then if they do say any time to think about it, say, you know, hey, you're hearing somebody here. Someone put yourself on mute. Mute Corey. That's probably Corey. All right, cool. So give themselves some time to think. And then if they do say, hey, you know what, we need to discuss this amongst each other, say, great. I think that's a great idea. Throw me on mute. I'll be here if you have any questions, okay? That works about 80% of the time. Do not do a follow-up call, okay? Our jobs are one call close, one call present. Again, we're at the very beginning. If we're establishing the need correctly, we should already have it sold. Before you present any options, we should have established our need, right? It's right here, establishing need. Lots of questions. Get them to say, yes, I don't want to protect my family. I don't care what happens. Good, I don't know why we're talking. Have a great day, sir, bye. Or I get it, it's important to have a place and see what it costs. I already have it sold, guys, okay? All right, so that's the close. Rebuttals. I'm gonna work on some of these, guys. I'm gonna keep filming this stuff out. Please, I'm going to Vegas to do another podcast with Andrew Taylor. I need more rebuttals. I'm gonna do a rebuttal podcast. So if you guys think of rebuttals, please let me know. Let's go over a couple of these though. Hey, I need to discuss this with my wife. Perfect. Just went over that one. Thinks it's a great idea. Throw me a mute. Okay. Say they're covered by the VA. They're not. Look at this link. They only get $300. Yeah, I need some more time to think about it. Great. How long do you need? Oh, I should know in a couple of days. Okay, cool. So you think 30 days would be enough time to think on it? Yeah, that should be enough time. Okay, cool. So the company has to approve you first, and then they give you 30 days to think on it. Okay, so let's see if we can qualify you first. Already have coverage. Perfect. That's why I'm calling. New rates come out every day. That's the purpose of this call. What do you have? Because this is a good one. Now it's January 1st, right? Yeah, that's why I'm calling. The year 2022, so there's new rates. Exactly what I'm calling, just to run that through, because I saw you just got a policy. You guys see if that was still the lowest. Okay, so new rates came out. I don't think I need this. I just did that one earlier. Are you trying to say that $100 a month is not worth protecting Jill? Okay, in case you die, it's not worth protecting your family. $100 isn't worth it. Is that what you're saying? Well, no. Oh, I don't think I'm gonna die. Okay, well, how do you know you're not gonna die? I guess I don't. Okay, well, what if you did die tomorrow? What would happen? Will this help? Yeah. Okay, so questions. All right, so I'll kind of put some more. So if you guys think of stuff, please text me that stuff so I can just make a master rebuttal sheet. You guys can just practice this stuff and you'll know how to respond to everything. All right, guys, so there's no rebuttals. They decided on one, they're like ready to go. And then we fill out the e-app, go to practice these things, go to each website, log in, go to the Miracle website, look for the sales solutions on the right-hand side of the Miracle website. There's two options. There's one to do an actual app and there's a demo. So you can practice the demo one, go through each one of those, go through the Miracle Term 125, the C100, the Eagle, practice that. Right? It's going to take you probably 45 minutes at first, but I promise you, you're going to get faster at it. It should take about 20 minutes as you get better at it. John Hancock, I love because it takes about 8 minutes. American Amicable, 10 minutes. Mutual of Omaha takes forever. Aetna's fast too. So Mutual of Omaha and Miracle are the longest e-app processes. Miracle, John Hancock, Aetna, fastest. Okay, really key here. Really, really, really super key, guys. Once I have it sold, I don't want to lose to a cancel or a chargeback, right? So how do we stop those? We text our contact to the client so they have it, make a nice contact. You know, some of your picture in there, your phone, your email address. There's a way to send your contact to people, whether it's an Android or an iPhone. Make that, you know, your priority, figure that out, Google it. Then we need to establish need. Okay, so it's sold, they got approved, we're good to go. We don't just hang up the phone. We want to establish need. What are the 3 most important reasons why you got this in place? Okay, this is your chance to battle those rebuttals. Maybe they say, yeah, I don't know if I would keep it. Now, instead of them having that discussion between, you know, them and the wife, you're there to be in that discussion. So you're not done yet. Okay, they might say any kind of rebuttals. Now you can kind of, ask some more questions. Well, why, we just got approved for it. I mean, you get all your money back, right? I mean, why wouldn't you keep this? Well, I just don't know if I need it. Oh, okay. So if you died tomorrow, would you need it? Well, yeah, if I died tomorrow, but I don't think I'm gonna die. I'm only gonna die of an accident because I'm younger. Okay. How do you know that? Well, I don't really know that. Well, what if something did happen? Let's help you out. Yeah, but I don't think it's gonna happen. Okay, what's the lotto numbers tomorrow? Well, I don't know. So how do you know you're gonna die? You can't predict the future, right? So this is your chance to kind of make them go, okay, I get it, Ryan, I'm gonna keep the policy, right? This is how we stop our cancels and chargebacks, right? Right? Again, is $60 a month, is spending this money not worth to make sure that Jill's protected no matter what, your family's protected? So use that line. Cancels happen, we don't establish need, right? So again, before we present, we want to ask lots of questions, right? We're looking for, yes, I do want to protect my family, or no, I don't care about my family. Establish need before we present options, probably to gain cancels because they don't think they need it, right? So ask lots of questions. Stomp out the competition. Text them a copy of this after every presentation. Text them a copy, and or if you're in a face-to-face, hand them a copy of it and read it to them word for word. If any sales rep or agent from another company suggests that you cancel, replace, cash in, or discontinue your life, mortgage protection, final expense policy, please be very careful of any future replacement intent. And I have to read this to you, it's just legal. Okay, so I'm gonna go through it real quick. On the phone, if the agent tells you their supervisor and manager need to check their work for review, no one will call you to service policy except for the licensed agent that gave you this form. Does that make sense, Mr. Client? Yes. Okay, agent tells you you should cancel your policy and go to another company for lower premium. We already shopped for you today. If it's lower, it's because something's going on there. Okay, so we already have the lowest premium, so be cautious of that. Agent tells you they're from another lender or bank and can offer you a better deal. Lenders and banks do lending, okay, not insurance, okay? So be cautious of that. Always ask for the agent's life insurance license. Agents should always show you a copy of the license during the appointment. So if you're gonna use this, I guess you gotta send them a copy of the license. I send it to every single person once I book the appointment or at the start of the appointment. You can always confirm the insurance license number with the Department of Insurance. Just Google, look up the insurance license in your state, type in license number and or national producer number. While replacement can be beneficial, there are many reasons a cancellation or replacement may not be in your best interest. You need to have all the facts. This notice is for your awareness. Okay, any questions on that, Bob? Okay, great. Glad we got that out of the way. Now you're done. Hey, have a great day. Glad we got it saved. Glad we got protected. If you need anything at all, just give me a quick jingle. I'm here to help, okay? Boom, right? Actually, you're not done yet. Then you got to get your referrals. I put it up here so you guys would see it. But yeah, get your referrals, right? You're not done yet. So get some referrals. All right, get some free leads. Free leads are good. Study that referral page. Now you're done. Now you got some referrals. Now you're done. Okay. What's after that? We got to close. Now we submit our numbers every Wednesday night, fflsubmit.com. Okay, we have our admin. For everybody that doesn't have their camera on, I don't know why you're here. Like, if you're not paying attention, I don't know why you're on here. You're running away to the bathroom, trying to teach you how to make money. You're taking
I'm
off.
paying attention. I just look a hot mess.
Okay. Well, anyone else, let's make sure this is stuff to make you money. Okay. So admin here. So every single day, it's part of your schedule. Call the carriers, make sure that your stuff's getting approved, right? And just because it says approved, issued. Just because it says approved doesn't mean that you're getting paid on it. So make sure you're getting issued. So call the carriers. You're calling one carrier, Americo, okay, and just saying, hey, did that get approved? Did I get paid on it? Just get in the habit of doing that daily so we can get you paid quickly. Maybe there's the bank account information's off, or maybe there's something else going on with it. So get in the habit of checking your admin daily, and it should only take you about 15 minutes a day. So just watch your video in the morning, check on your admin. If you have CRM leads and want to take them out of rotation, this explains how to do that. That way, if you sold a lead or you sold a client, it's not being resold, right? So if we buy a new lead or a instant lead, if it doesn't get taken on rotation, that becomes a 1-month-old lead. Doesn't get taken on rotation, it becomes a 3-month-old lead. So once you sell it, this is how you can suppress that lead so it doesn't get sold to another FFL agent. Okay. Questions? All right, this is what I do. You guys can do whatever you want, but you know, you can copy all this and then you guys can put it in your notes, and then you can kind of have all your username and passwords all saved in one spot. That's what I do. Insurance Base, CRM, HMS has some links, has the numbers of the carriers to call. So that's what I do. But just want to tell you what I do. Has a bunch of links to other stuff too here. So pretty useful to have in your notes. All right, guys. So just to recap, guys, I know it seemed like a lot of information because I was going into descriptions about it, but from A to Z, guys, protecting a family, we got commitment. Most people give up too early. Got to decide which one you're going to be. Takes about 50 presentations to get the hang of this, to learn how to ride the bike. You have to invest. The more you invest, the quicker you're going to get to 50, the more opportunities, right? We invest by buying some leads. Our client requests, people requesting help. Okay, we need some lead discounts here. Referrals. Let's get some free leads. Right, huge. So start asking for referrals. Pablo, guys, he did $33,000 this week. 90% of it was from referrals. He is utilizing this crazy. And I'm going to do next Monday a podcast with him and ask him exactly what he's doing. But for now, we can use this stuff. So get some referrals. After that, we present. Right, now's our presentation. Call them up, read the script, find your no's, call 3 times in a row. Any objection, that's why I'm calling. Find the need, be curious, right, before you present. Now you found the need, fill out the medical form. Now you figure out you know what age bracket they're in, you know which product you're going to write, either this product, or this product. And if they can't get one of those 3 products, we're going with this product. Okay. How do we see if they can qualify? We'll use our cheat sheets. Then I'm going to quote it out, give them 2 options, nice and simple. Then I'm going to close it down. Any rebuttals, I'm going to respond to those. I fill out the EAP. Then I'm going to stop my cancels and chargebacks. And then I'm going to ask for some referrals, right? Maybe I should move the referrals down here. I just want to put it up there to make sure you guys make that important by the lead section. So we can get free leads by asking for referrals, okay? Check on our admin weekly. And that's it. That's the A to Z, okay? Now there is advanced training. So if we go over here to advanced training, we have the virtual sales boot camp, lots of good information. This is going to take you probably, 10 hours to go through. Lots and lots of stuff. FFL boot camp, 15 hours to go through. Josh Williams boot camp, pretty quick actually, about 2 hours. It's a really good one. So I'd go through that one. Advanced trainings for annuities. But what I wanted to make happen with this basic training is to make you know that within an hour and a half, we know from A to Z what it takes to go out there and protect families and make money for ourselves.